Welcome to the Driven to Succeed Real Estate Podcast. I'm your host, Landon Olson. And today we are going to go through all things VA. And I have a special guest and welcoming back Landon Olson, VA specialist. Let's talk about what it's going to take, or why having a VA loan, who's eligible, everything VA.
Yes, that's a passion of mine is helping veterans out. Um, you know, I know quite a few people, and there's a lot of benefits to having a VA loan, because you had served. So,
Well, let's dive right into it. Let's get going. What is a VA? Who is eligible and how do you prove it?
VA is a loan for anybody that served in the military, United States military. From Army, Navy, U.S. Coast Guard, Air Force, and Marines. If you are active duty, or you were active duty veterans, you are eligible if you've served 90 days during wartime, or 180 days consecutive during peacetime. And you have to be, in order to qualify, you have to be discharged on anything other than unhonorable.
So when you say 180 days, do you have to be deployed for 180 days?
No, you do not have to be deployed for 100 days. You just have to be in service for 181 days.
181 days.
Yes.
Okay.
Yep.
So what if I'm National Guard or reserves?
National Guard and reserves, that's a little bit different. You do have a minimum qualification of having to have served for a minimum of 6 years.
Okay.
In order to qualify.
Excellent. So a VA loan is considered a government loan. So is an FHA, so is rural development. How does a VA differ from a FHA loan?
VA loan is a different. It's different because it doesn't require a down payment. There's no down payment required, which is significant compared to a conventional loan where you'll need anywhere from 3 to 20% down. FHA loan, a minimum of 3.5% down.
Okay, perfect.
There's also no private mortgage insurance needed.
Yes. So in lieu of that, though, there might be what is called a funding fee, correct?
Yes. Yep. There is a funding fee. It's a little bit less, than traditional. You do also have competitive interest rates. That's better than your traditional mortgage. There's limited closing costs too, and no prepayment penalties.
Correct. So with a VA loan too, one of the best benefits is that there is, like, an FHA will have mortgage insurance, but a VA loan does not have mortgage insurance. They have the funding fee. So that funding fee gets financed into the transaction, or you can pay it out of pocket if you want. Right. But it gets financed into the transaction, which helps make that payment a lot more affordable.
Yes, definitely. It's a one-time fee.
Yep. How long? So some of the myths that I've always heard and talked to, and specifically, this is where it really bugs me, is that sellers or listing agents oh, here's a VA loan, right? And how long does the VA loan process take, and what are the typical closing costs? This is where sellers and sometimes even buyers agents will look at these.
Yeah. So typically, it's maybe an additional 7 days to 10 days. The biggest thing is just getting your documentation in, like a normal loan, and then getting your proof of eligibility from whether it's the VA or your company commander. That can be a holdup, but if we get on top of it right away, let the buyer know this is what you need. Reach out and get it.
And before putting an offer in.
Before putting an offer in, correct.
Yes.
So
when we say 7 to 10 days, why does it take that long? I know that it's not on the processing and underwriting side, it's on the appraisal side.
It's on the appraisal side because that has to get ordered through the VA. Because it's got to be a VA approved appraiser.
Yep, and it gets ordered through them. Yep. They send it out. It all goes through them. That's the number one reason. That's also the reason why sellers or listing agents they don't like that process. But that's, if we get on it right away. I've never personally had a problem where we have to push the closing out because we didn't get the appraisal on time.
Right. So, yeah.
What credit score and income requirements are needed to qualify for a VA loan?
So, actually, the VA doesn't have like a particular score, but lenders do. We're, minimum of 580 credit score. For higher purchases, you're looking at a 620 credit score. And the debt to income ratio on this is actually it's 41% or less, so it's a little bit more favorable, and you need to show residual income.
Yep. And then total debt to income, when you say 41, that's like the housing. That's the front ratio, housing ratio.
Yes.
I've had loans get approved at over 60%, 59.99%. Now, when we do that, like, oh, how are you doing 60% of your income? Usually there's an alternative income, like for example, a VA loan. If a veteran and say his girlfriend or their girlfriend or boyfriend or significant other are not married, they can't go on the loan. So that's why we do have the little bit of eligibility, like, hey, the circumstances that you got a 60% approval because we got good credit. Everything lines up in that aspect. But we also know on our side when we're pre-approving somebody, like, hey, there's a second person helping make these payments and so forth. So that's why we can justify that.
Right.
Can a VA loan benefit be used more than once?
Yes, it can. You can buy, if you're, say, you sell the house and you buy another one, you can ask for that to be reissued again. You can also supplement it too if you only use partial and buy another property and you have some left available, you can use that credit as well.
Perfect. I know in my experience, it can be difficult, but it can be done because I've done it both ways. Are there any special rules or waivers if you have a VA disability rating?
Yes, there is. You can use your VA benefits, your disability benefits as income.
Yep. And you also do not have to pay a funding fee.
That is correct.
There's no funding fee. So the funding fee for first time use can be anywhere from 2.15 to 3.3%, and consecutive uses beyond. So it can get kind of expensive, but it gets financed into the transaction.
Right.
Can a VA loan be used for new construction, a manufactured or modular home, or even land and building purchases?
Yes, it absolutely can. You can do with a new construction, you could do a first time, purchase with that includes the whole construction, and it has to be built within a certain amount of time and move in. Your modular homes, you got to meet certain criterias. It's got to be a double wide or bigger. You cannot be a single. You have to have the wheels, axles, and the tongue removed from the home, and it has to be fixed to real property. And it has to have your permanent steps built up to it too. So
awesome.
Some things.
Yeah, that's some of the challenges, specifically in rural areas. You get a lot of, you'll see some land, then you'll see a single wide on it, and that's the problem. It's a single wide.
Right.
And the single wide is simply because it's too easy to move.
Right.
Whereas a double wide, you have to split it apart, get the wheels put back on, and everything else. Can you buy a multifamily with it? Duplex, triplex, fourplex. And what are all the criteria behind that?
On the duplex and triplex, you can buy those as well. You do have to live in one of the units. You can rent out the other three. Say it's a tri or a fourplex, you can rent out the other three. You do need to show at least 2 years of previous rental experience, and or have a rental property manager company run it for you.
Correct. If you get an approved management company, then you don't have to have the experience. Correct. Yep. So that's where a lot of people get. This is where buying a multifamily home can be really awesome, specifically for down the road. Like, you may move in as a veteran, you move in, zero down, correct?
Correct.
Yep,
Yep.
zero down, multifamily home on a VA loan, live in one unit of a 4 unit complex. Maybe you're collecting $800, $1,200 per unit beyond that. You really potentially paying all of your payment. You don't even have to make a payment. And then a couple years down the road, you can potentially go buy a new home.
Yes,
And
and you can actually um, use roughly 75% of your expected earnings off the other three to qualify to buy the fourplex.
that's a very good point because, if you're looking at a duplex or a duplex, triplex, and a multifamily 4 unit home, you could be $1 million
Right.
for it, right?
Right. That's a lot.
And maybe your income's only, $100,000 or $80,000. How do you afford that, right? But if, maybe it's not a million, but maybe it's 600, 700,000, and you got rents that are coming in that covers and gives you that additional income.
Yes, you will. One other factor, though, you will need to have 6 months of reserves in order to supplement that.
Valid point. So if you use reserves, can you use a 401k for reserves, right?
Yes.
So let's say you have $40,000 in a 401k, and you can roughly take out a loan for half of that, $20,000, and say your payment's $2,500. You would have 6 months of reserves being able to be used for that.
Right.
Retirement funds can be used.
That's huge. It's a big benefit.
It's a huge benefit. What happens to a VA? Here we're gonna get into something. What happens when this happens, right? What happens when there's a divorce? Who keeps the house and who stays liable?
See so on the divorce, it's all by court order. What your divorce decree says, who keeps it. So I mean, if you're the veteran, you keep the house, the responsibility of the VA loan stays with you. And if your ex-spouse assumes the property, the loan stays in that person, this ex-spouse pays for it, but the rating, your VA rating, stays with that house until it's paid in full, or the ex-spouse goes out and gets their own qualifying credit and purchases it from the veteran.
Yeah, a lot of times, and this is where it's very important in this, a lot of times a divorce decree will state in there that whoever's getting the house, there's a loan on it that they have typically like 6 months to obtain new financing for that house. Because a lot of times they got to pay somebody else out
Right.
too. So
Yeah.
that's part of that whole process. So that way they can reestablish their VA benefit to purchase the next home for themselves.
Right. Yep.
Mm-hmm. What are the VA's minimum property requirements, and can they kill a deal over things like swimming pools, solar panels, and minor repairs?
So the main thing for like that, there's in swimming pools, for example, they get to look at to see if it's operational. Is it safe? Is it structurally sound? If it's not, then that will be negotiated in the whole purchase price, or the whole part of it. So they look at factors like that. Solar panels, those are a different breed, because you got to look at, are they owned? Does the seller own the solar panels, or are they leased solar panels? I mean, so if they're owned, they go with the sale of the property. If they're leased, the VA looks at it as a case by case situation on how that goes with the electric company that you're working with.
Very interesting.
So, and then yes, minor repairs, they're just minor repairs. They will not kill a deal. It'll just be negotiated in the selling of who's going to pay it, the traditional way that normally things happen.
So, as a veteran looking at a home that has a swimming pool, that's not a deal breaker. Having solar panels is not. You just have to look at how does that work. I've seen it many times, and this is where, and people are going to probably get mad at me saying this, but solar panels, in my opinion, is so expensive to put on, and the cost to recoup everything it's so hard. And I've seen people where I put on $35,000 with solar panels. I still owe 28 grand, and I bought the house 2 years ago. I want to sell. I don't have the money, and it doesn't give us the extra value because the people coming in either has to they have to want that, take
Right.
on that new payment
Right.
because they owe this much money on it. There's a lien against it. That is a deal breaker when it's in those type of situations. So that's where the whole financing of solar panels to me is that's what I don't like. I mean, I love solar panels as the idea.
Right.
If you pay for them up front
Yep.
and not finance them over the longest term possible, because
Right.
that's where the deal killers really come in.
Yep.
So Landon, now that we kind of got those questions out of the way, let's talk about what your initiative is. Specifically in Minnesota, we're talking about Brainerd and like some other areas. You're looking at, you've got a lot of connections up there, and you're going to be outreach doing that up there. Obviously, Camp Ripley is in Little Falls. It's that's in your so-called neighborhood,
Right.
right? So, like, you're going to be visiting some places up there.
Yeah, actually, I just met with a newer real estate agent up in the Brainerd area, and she works with a lot of veterans. She works with um, getting in touch with veterans and doing that. So I'm partnering up with her on doing VA loans specifically, and then I am going to go to my American Legions, my VFWs, and just go back in and talk to the people. Let everybody know in there that this is what I'm doing now, and put up just a sign saying that I'm a VA loan specialist and I'm here to help move wherever whatever you're looking for. And Camp Ripley specifically, I know the gas station convenience store right outside. It's a private company, so I'm gonna go talk to them and see if they'll let me put a sign on their building so that right when the guards come out, they come out of camp, the main gate, they see my sign right there. So
Fantastic. Fantastic. I've been toying with the idea since you're on my team. I've been toying with the idea. I thought about this. I haven't quite did it yet, but I'm looking at building the website for you to be a VA specialist so that we can get it out there. We can have the answers to all the Q&A, just what we just did, to all these questions out there. And have some pre-qualifying questions on that website for you to generate some new business. So I'm looking forward to your success. Obviously, we don't have giant bases in Minnesota like some of the other states do,
right.
but we have a lot of veterans in Minnesota, period.
We do.
Right?
Yes.
And I personally have spoke with a lot of veterans over the years that don't know all the benefits and don't know what they're capable of getting and so
right.
forth.
They don't understand the benefits that's available for them, like you said, and how much benefits there are. There's some may think there's just not much, and they'll just go to a lender and get a conventional loan when they're leaving money out or spend more money in the long run.
Awesome.
So,
Well, I really like that you've taken this initiative. Make this a niche for you. Many loan officers start in this business and you just do like the down payment assistance programs, which you're going to do all the way. Also, you can use, so the one thing with VA loans too is you got to look at, there's still going to be closing costs. Even though it's zero down, you still got closing costs. So we can ask sellers to pay for the closing costs. You can truly come in with like no money out of pocket.
correct.
Gets a little difficult doing that. So there are other ways to do financing for those. So if you qualify for a Minnesota housing loan, maybe you can get $14,000 for deferred down payment assistance to cover closing costs.
Right.
And so forth. So we had some other programs, some other things, but I'm looking forward to seeing that initiative. We need way more VA loans here for sure.
Yes. Yep. My first loan was a VA loan, and I was very happy to do that. So.
Yes. Well, here we go. Landon, thanks for coming back on.
Thank you, Brandon.
Looking forward to seeing this in the future, what you can do.
I appreciate it, and I'm looking forward to come back with more success stories.
Awesome. Thank you.